It's a refundable credit, and it's one of the ones that a lot of people are eligible for because it's mostly based on income. So to start off, you have to have earned income to qualify. And we have earned income and we have unearned income. Earned income is income that you essentially traded a service or you provided or you did work for and you got paid. Unearned income is passive income or pay that you received without necessarily having to work. So what we have a list here that we can refer to on the publication 4012. So earned income could also be taxable long-term disability benefits that was received before the minimum age of retirement. And then just a few unearned income lists would be interest dividends, Social Security, unemployment compensation. Those would not qualify you for the earned income credit. So then we're gonna start with the requirements for everyone in order to be eligible for the earned income credit. So everyone would have to have a Social Security number. That's both the taxpayers and the qualifying children. And what we mean by have Social Security numbers is that the Social Security number needs to allow you to work in the US. It used to be that you couldn't claim the earned income credit if the children didn't have a Social Security number, but you can now. You just would have to follow the requirements for no qualifying children. The other thing would be is that you can't be filing a return as married filing separate unless you did not live with your spouse for the last 6 months of the year, or there's a separation agreement and the child lived with you for more than half the year. The other part is that you have to be a US citizen or resident the entire year. You also can't be filing Form 2555, and then you can have investment income, but it can't be more than the 11,000. And then you also can't be a qualifying child for another person. Which leads us into the requirements for if you have a qualifying child. So there's 4 tests that need to be met, and then the child cannot be claimed more than once for the EIC. So then this slide goes into detail of what those are. So it's the relationship test, the age test, the joint filing test, and then the residency test. So this gets a little confusing with the dependency because a dependent can be claimed. So like if you're from Canada or from like Mexico, you can have a dependent who's living in that country. For the EIC, the child has to be in the United States for more than half the year. The other part that gets a little confusing is step 3, so the age test. So a child can be a qualifying child if they're over the age of 18, so between 19 and 24, if they're a full-time student. If they're permanently or totally disabled, any age is applicable for a qualifying child. What else do I need to cover here? Oh, the one thing that I did want to mention is that the substantial test, so like can the child support themselves provide more than half of their support? This does not apply for the earned income because the earned income doesn't take support into account. So if, for example, it's most likely seen with a college-age student, they can be claimed by their parent for the earned income, even if they supported more than half of their income. The last piece would be step 6. So the child can only be claimed once for the EIC, but the child may be a qualifying child for more than one person, which gets a little confusing. So we're going to get into that here on this slide. So if the child can be claimed by more than one person for the EIC, we go into like tiebreaker rules. So by default, the child will always go to the parent. If the other person is not the parent, then the qualifying child is that of the parent. If the both people claiming the child are the parents, then it goes into who did the child live longer with during the year. If that is the same, then it goes into who has the highest AGI. And then that's who the child can be rightfully claimed by. If none of the taxpayers are the parent's child, then it goes to the highest AGI. And I wanted to point out here that the child has to be a direct descendant or blood related, but it can't be a cousin. But it could be like an adopted child, a foster child, step brother, stepsister, or a descendant of those. What else did we need to cover? Oh, and then I did want to add, there's a form 8332, which releases dependency of a child. But that does not mean that it makes them eligible for the EIC credit, because again, the child has to live with that taxpayer for more than half the year. And I think now we can move on to if there's no qualifying child. So in order to qualify for the EIC, you have to be between the ages of 25 and over. I mean, between 25 and 65, sorry. 25 and 65. You have to have lived in the US for more than half the year, and you can't be the dependent for someone else. So this one sometimes gets a little bit confusing when we have perhaps like a refugee taxpayer who came in during the year. If they weren't here for more than half the year, then they do not qualify. And then we have the income limitations. So we have, if there's no qualifying children, you have to be under the 17,000. And then those are the respective ones for the other ones if you have 1, 2, or 3 qualifying children, sorry. And then there is a form 8862. So perhaps the taxpayer was disallowed the earned income credit for some reason. And so if it was disallowed, you have to include the form 8862, or else the tax return will reject if it's in the system. Oops. Is there anything, because I think from here, yeah, we go into the examples. Is there any questions? I know I went through it kind of fast. I did want to mention that when it comes to issuing the refunds that contain the earned income credit, the refunds don't get issued until mid-February. So that's something with the earned income credit that needs to be taken into account, is that they won't start to be issuing. I think this year they said starting February 28th is when taxpayers should start seeing refunds if it includes the earned income credit. Let me see. Is there any questions, anything that I missed?
Anna, we talked about this on Monday, that this is one, if not the only credit that is dependent on where the child is living
Yes.
for
Yes.
more than, or when one day more than half the year.
Yeah.
Okay.
Yeah, it gets a little confusing sometimes, especially with the dependency, because the child can be a dependent, but they might not be a qualifying child for the earned income credit because they may have not lived with the parent for more than half the year, or the taxpayer for more than half the year.
And then Anna, so it's in publication, in Pub 4012, what tab is the earned income credit under? Do you know offhand, or I can look that up?
Yeah, it's tab I have.
Okay, so tab I. Okay.
Mhm.
All right, thank you.
Yeah, there's a few other charts that are on the publication. I'm gonna see because I have them pulled up. that help you. So like if it gets a little bit confusing when you're with a taxpayer, let me see if I can find the summary of it. I want to share the screen. And then I do see that Sinway asked if the EIC increased for this year. I believe it increased only slightly, right? I'm like, I can't remember what the numbers were for last year off the top of my head, but I do believe it increased just slightly. So let me share my screen again so I can show you. So this is the publication 4012. And I really like it because they have a lot of helpful charts. So this one's just the summary. So it's going to ask you the rules for everyone in this part 1. Part B and C, it depends on if you have a qualifying child or not. And then part D shows you the earned income limitations right off the hand. But yeah, this is all in chapter I or tab I for the earned income credit. So is there any other questions, anything else?
Well, thank you, Anna. And Sinway, somewhere I have a document that was sent to me that has basically the increases in standard deduction earned income credits per child for with no qualifying child, child tax, additional child tax, those kinds of things.
Doesn't say, I was gonna just cover one of the questions that I know, like even I, when I look at it, makes me have to go back into the book. Let me share again. So we have examples in the back, and it always gets confusing to me. So there's a scenario where it's, I think it's the grandma and it's the daughter, and both, essentially, it seems like both can claim the qualifying child. And the part that always gets confusing to me is the relationship piece of it. So because the other person is the parent, that's who the child would go to for the earned income credit, even though the grandma, it seems like the grandma would be eligible because the grandma also provided for the child and lived with them because it's a multi-generational family household. And that does actually happen in once you start doing tax returns. So it's always a distinction that even I myself have to remind myself, like, who does the child for EIC, who's the parent? And did the child live with the parent the full year if the parent is there? And is who's claiming them as well. So yeah. And I think that's all.
Any questions on any part of earned income credit? Once again, this is something that if we have all the information accurately placed in the basic information at the beginning of the tax return, that this will calculate. But it's always good to understand who can claim the earned income credit, because I think in the past, this is the one between it and child tax and advanced child tax credit. People are looking at those three credits to see why the return was either lower or higher than the
Yeah.
previous year.
Yeah, this credit is one of the credits that will give one of the largest really nice refunds, but it's also why people sometimes try to like figure something out to like maybe abuse the system. And so we have to make sure that we're asking the right questions and we're probing the taxpayer.
Yeah, because depending on the amount of income, depending on where they hit the different earned income thresholds at, it can make a significant difference on how much earned income credit they get back.
Yeah. Yeah, and oftentimes you will hear, well, why am I not getting the same that I got last year, or why am I getting less? And a lot of the times you have to go back and see if they were eligible for the EIC the previous year. If they weren't the new tax year, then that's usually the difference.
So I just
Or
wanted to.
some people get small raises and stuff, but it'll be
That's
just
enough.
enough that it will decrease their earned income credit a lot. So sometimes people are like, well, why did this change? I have the same job. I did this thing. And then we look and we're like, oh, you got a 3% raise. So your income got bumped out. So there are things like that where people do that, or people, of course, like to compare to other people that they think are the same as them, even though they're not. But
Exactly. I just was going to bring your attention to one of the points that Anna was making that, and we'll get to the chat question here in a moment. So on page 72 of publication 6744, the advanced scenario 4 with Carmen Gomez. Once again, we're not going to give any test answers, but on question 9 and question 10, just to be cognizant of what they're asking for. So like in question 9, they're asking about who can claim the child as a dependent. And then question 10 then is asking about who is eligible to claim the child for the earned income credit. So, and we see a lot of just even this question at our sites too, playing out with different families or different households.
Mhm.
I had to look because I always get them right, but I just don't know how I get them right. Now I know. Thank you, Anna.
Yep. And then Fatma asks, if the child is temporarily absent from the home, is it considered as not living with the parent? It depends on what the child is temporarily absent for. So for example, if they're a college student, um, for EIC purposes, they are still considered to be there for more than half the year, right? Um,
yeah. Yeah, if they're a college student, they're considered to be living at home still for the entire year. So.
mhm. And so then, go ahead, Dr. May.
I was going to say, and if they're incarcerated or if they're in a healthcare facilities.
And if they're unfortunately kidnapped as well.
Yes, thank you.
So then it would depend on what they would be absent from the home for. Fatma, did that answer your question? You're welcome. Any other questions that someone has? Anything like?
Well, Anna, thank you so much.